You know the problem with most trend-following systems? They give you signals, but no context. You see a buy arrow, you take it, then price immediately reverses because you didn't check if higher timeframes agreed or if volume was supporting the move. And this is exactly why you need to see this new indicator that doesn't just give you signals, but also filters them through 6 timeframes simultaneously and shows you exactly when volume backs up the move. In this video, I'm going to show you exactly what this indicator is, the best settings to use, and a complete trading strategy with precise entry and exit that works across any market. Let's get into it. To add this indicator to your chart, head over to TradingView and pull up any market you want. I'm using the 1-minute time frame on XAUUSD, but this works on any market, any time frame. Click on Indicators and type in Trend Channel Swift Edge. You'll see it in the list. Now, most trend indicators just show you what's happening on your time frame and leave you guessing about higher time frame alignment. The Trend Channel Swift Edge instead combines a dynamic price channel with multi-time frame analysis to give you the complete picture before you risk a single dollar. On taking a closer look at this indicator, you'll see it's made up of several powerful components. First is the dynamic trend channel. At its core, there's a moving average you can choose from: SMA, EMA, or WMA, but the default is EMA, which is set at 14 periods. This MA forms the backbone of the system. The indicator then calculates the highest and lowest values of this MA over a period to create upper and lower channel bounds. These bounds then determine the trend state. So when price is above the upper channel, you see a green holographic glow, which means trend is up, and when price is below the lower channel, you see a red glow, which means trend is up. But when price is between the channels, trend is neutral with a blue tint. In the top right corner, you'll see a panel displaying trend direction across 6 time frames: 1 minute, 5 minute, 15 minute, 1 hour, 4 hour, and daily. Each time frame shows up, neon green, down, neon red, or neutral, gray. This gives you instant market context without switching between multiple charts. Third is the intelligent signal system. The indicator doesn't fire signals just because price crosses the channel. No, it filters every signal through a higher time frame you select, which means a Swift Edge buy signal only appears when price crosses above the upper channel, and your selected higher time frame's trend also shows up, and a Swift Edge sell signal only appears when price crosses below the lower channel and the higher time frame shows down. If the selected higher time frame shows neutral, the indicator automatically checks even higher time frames to confirm direction. This multi-layered filtering eliminates the false signals that destroy most traders' accounts. Now here's the truth. Most retail traders never figure out. You can learn every manipulation setup I just showed you, but if you're manually staring at charts, you'll always be the last one in and the first one out. That's exactly why we automate everything: entries, exits, and risk management. Our traders run these exact setups fully automated across forex, crypto, and indices, and the results speak for themselves. Like Ethan, who got funded 3 different times using these systems, or Marion, who made $10,000 in just 10 days while still working full-time as a chef. These aren't what-ifs, they're real results happening inside our community every single day. If you want to see the live performance results and backtest data for yourself, click the first link in the description before the spots close. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. Now, to get the most accurate signals from this indicator, let's get your settings right. Double-click on the indicator to open the settings panel. You'll see the Swift Edge moving average type. You've got 3 choices: SMA, EMA, or WMA. I recommend keeping it on EMA, as EMA gives more weight to recent price action, making it more responsive to current market conditions without being too noisy. Next is the Swift Edge MA length. It's set to 14 periods by default, but here's how to adjust based on your style. For scalpers on 1-minute to 5-minute charts, drop it to 10 to 12 for faster reactions. For day traders on 5-minute to 15-minute charts, keep it at 14 to 20 for balanced responsiveness. For swing traders on 1 hour to 4 hour charts, bump it to 20 to 30 for stability and fewer signals. Remember, shorter MA equals more signals but more noise. Longer MA equals fewer signals but higher quality. Finally, you have the Swift Edge signal filter time frame. This is the critical setting that makes or breaks your results, as it determines which higher time frame must agree with your chart before signals fire. If you're trading 1 minute, select 15M or 1H as your filter. If you're trading 5 minute, select 1H as your filter. If you're trading 15 minute, select 4H as your filter. The rule is simple. Your filter time frame should be at least 15 times your chart time frame, as this ensures you're trading with broader market structure, not against it. Once you've adjusted these settings, click OK. But before we get into the strategy, we need to add one missing piece: volume confirmation. Because the truth is, using trend signals without volume is basically gambling. You might have perfect multi-time frame alignment, but if the breakout happens on weak volume, institutions aren't backing the move, and it's likely to fail immediately. To add it to your chart, go back to your indicator search, type volume, and select the built-in volume indicator under technicals. Once it's on your chart, you'll see a histogram appear at the bottom showing volume bars for each candle. Now double-click on the volume indicator to open its settings, then jump to the Style tab. You'll see an option for Volume MA. Toggle this on, as this adds a moving average line to your volume histogram, acting as your threshold for significant versus average volume. Next, change the color of that MA line to white, so it stands out clearly. Now let's put all these pieces together into a complete trading strategy. For long entries, you need 4 specific conditions to align. First, confirm the trend is bullish on your chart time frame. Look at your price chart. You want to see the green trend channel visible with price trading above the upper channel bound. When price closes above that upper bound, it means trend is up on your time frame. You should see the neon green glow around price and the channel showing bullish structure. Second, you want to check the multi-time frame dashboard for alignment. Let's say you're trading 1 minute with a 15-minute filter. Make sure to check the 15M row. It must show up, neon green. But don't stop there. Check all 6 time frames. Ideally, you want at least 4 of the 6 showing up for maximum confluence. But if only 1 or 2 are up, while the rest are down or neutral, skip the trade entirely as your signal is fighting higher time frame structure. After that, wait for the Swift Edge BI signal to appear, because you don't want to enter just because the chart looks bullish and time frames are aligned. Instead, you need the actual signal confirmation. This label means the indicator has done the multi-time frame analysis for you and approved the trade. No label means no entry. It's that simple. Finally, you want to confirm volume participation. Look at the volume histogram at the bottom of your chart and find the volume bar that corresponds to the signal candle, the candle where the BY label appeared. That volume bar must be green, bullish candle, and must close above the white volume MA line. Because if the volume bar is sitting below the MA line, it means the breakout is happening on weak volume. But if it closes above the MA, you've got institutional conviction backing the move. That's your green light. Now, when all 4 conditions are met, enter your long position at the next candle open after signal confirmation. Set your stop loss just below the recent swing low, the lowest point before the breakout. For take profit, use a minimum 1-to-2 risk-reward ratio. Let the trade run, and as you can see, the trade would have been profitable. For shorts, follow the same process but in reverse. First, confirm the trend is bearish on your chart time frame. Look for the red trend channel visible with price trading below the lower channel bound. Now, when price closes below that lower bound, you know trend is down on your time frame. You should see the neon red glow and channel showing bearish structure clearly. Second, check the multi-time frame dashboard for bearish alignment. Look at the top right dashboard. Your selected filter time frame must show down, neon red. Then check all 6 time frames. You want at least 4 of the 6 showing down for strong confluence. Third, wait for the Swift Edge sell signal to appear above a candle. This appears when price crosses below the lower channel and the higher time frame filter confirms a downtrend fourth. Check the volume bar corresponding to the signal candle. It must be red, bearish candle, and must close above the white volume MA line. This proves selling pressure is expanding and institutions are participating in the breakdown. When all 4 conditions align, enter your short position at the next candle, open after confirmation. Set your stop loss just above the recent swing high and target a 1-to-2 risk-reward ratio. Here's what separates profitable traders from everyone else watching this video. Retail keeps chasing breakouts and getting dumped on, while institutions pocket the profits. You can master every manipulation strategy I just showed you, but if you're trading manually, you'll burn out long before you ever get consistent results. That's why we built automated systems that hunt these manipulation moves 24/7. No emotions, no missed setups, just results. Over 600 traders are already using these exact systems, like Dan, who made $9,000 in his very first month, or Steven, who shows consistent overnight profits while he sleeps. But I only take on 30 traders each month because I personally guide everyone through setup to make sure you're getting results. So if you're serious about finally trading with the institutions instead of against them, click the first link now before spots fill up. Disclaimer: this is for educational purposes only. Trading carries risk, and no strategy can guarantee results. Now, different markets have unique characteristics that require different settings for best performance. For forex pairs, especially major pairs like EURUSD and GBP/JPY, set MA length to 14. For signal filter, use 15M or 1H filter if you're trading 1M and 1H filter if you're trading 5M. For crypto, drop MA length to 10 to 14. Crypto moves faster and more explosively than traditional markets. For signal filter, same time frame rules as forex. Filter should be 15 times your chart time frame minimum. For gold, XAUUSD, set MA length to 14 to 18. Gold has unique volatility, so this setting helps to filter whipsaws. For signal filter, if on 1 minute, use 1 hour minimum. If on 5M, use 4H. Thanks for watching, and I'll see you in the next one.